You know, there's a single number that pretty much controls your life, way more than you probably realize. It pulls the strings on your savings, your investments, that mortgage you pay every month, even the price of your coffee. That number? It's the price of oil. And right now it is about to send a massive shockwave through the entire global economy.
So, our story kicks off right here, in this tiny strip of water just 33 kilometers wide that separates Iran and Oman. This is the Strait of Hormuz. And at this very moment, absolutely nothing is getting through. Oil tankers, they've all been forced to turn back. See, a risk assessment on some spreadsheet in a London insurance office pulled all the coverage. It did what no missile ever could. It brought a global choke point to a dead stop.
So just how important is this little strait? Well, every single day, 21 million barrels of oil used to flow through here. Let that sink in. That is more than 21% of the entire planet's daily oil consumption. And right now, that corridor is completely empty.
Okay. But why should you care about some crisis happening thousands of miles away? How does that actually affect your wallet? Because oil isn't just something you pump into your car. Oh no, it is the hidden ingredient that's literally woven into everything you do every single day.
Just think about your morning. That electricity that powered your alarm clock, yeah, mostly from fossil fuels. The plastic jug your milk or juice came in, that comes from petroleum. Even the toothbrush you used this morning has parts that are derived from oil.
And believe me, it doesn't stop there. The asphalt on the road you drive on is an oil product. The fertilizer that grew the wheat for your toast? You guessed it, also from petroleum. Oil is in our medicines, our clothes, our phones. It's not just another commodity. It's the base price for the entire economy. When that price moves, everything moves right along with it.
All right, let's picture the economy as this big, complex machine with three main gears. Now, when the price of oil spikes, it turns that first gear, and that sets off a chain reaction that gets the whole machine moving in a way you're definitely going to feel.
So how does this whole machine work? Well, the first gear is production. Every single business, I'm talking from a massive airline down to your local pizza shop, suddenly sees their costs shoot up. The second gear is transport. Over 90% of global transport runs on crude oil. So the cost to move anything, from that package you ordered online to the cheese for that pizza, it goes up too. And that leads us straight to the third gear, inflation. All those higher costs, businesses pass them right on to us.
And look, this isn't just some vague theory. We can actually measure it. Economists figured that for every $10 increase in the price of a barrel of oil, the consumer price index, what we all call inflation, goes up by about 0.3%.
Now, I know what you're thinking. 0.3%? That sounds tiny, right? Like a rounding error. But here's what it actually means for you. It means the central banks, who are freaking out about that rising inflation, they hit pause on cutting interest rates. So that mortgage rate you were hoping would finally go down, it stays high. That loan for a new car, suddenly more expensive. Your savings are buying less than they did yesterday. That tiny percentage just became a very real and very painful number in your bank account.
But wait, there's another layer to this, a more hidden effect. Let's move on, because this is where it gets really interesting. We're about to see how this all builds into something even bigger, a multiplier effect that creates a double hit, especially for anyone living outside the United States.
This is the multi-trillion-dollar question, because in times of global uncertainty, these two things, the price of oil and the US dollar, they often shoot up at the exact same time, and the result, it's a perfect storm for your wallet.
And here it is, the double whammy. First, the price of oil itself goes up. That's punch number one. But second, because oil is priced all over the world in US dollars, a crisis like this makes the dollar stronger as investors rush to safety. So for anyone paying with euros or pounds or yen, it now costs even more of your local currency to buy that same, already more expensive, barrel of oil. You're getting hit with two price hikes at once.
Okay, so let's dive into how the financial markets actually handle a shock like this. Because your first instinct, everyone's first instinct, is usually panic. But, 20 years of data tells a very, very different story about what the right and wrong moves really are.
In the immediate short term, say over a month or so, the link is pretty clear. A sudden oil spike almost always sends stock markets tumbling. It makes sense, right? Higher costs, lower profits, nervous shoppers. But if you zoom out and look at the long term, like 18 months, something amazing happens. Out of the last 9 major oil price rallies, the stock market actually moved in the same direction as oil 6 times. Why? because over time, they're both driven by the same engine, a growing economy.
So here's the absolute key takeaway for any investor watching. History shows us again and again that the biggest mistakes are made in those first few frantic days. That impulse to panic sell everything or to go all in on oil stocks out of euphoria, it's almost always the wrong call. The geopolitical shock, it fades, but the underlying economy, it always comes back. In this game, patience isn't just a virtue, it's a battle-tested strategy.
Okay, let's zoom out one more time. Because this crisis in a little 33-kilometer strait, it isn't happening in a bubble. It's just one tiny point in a huge, interconnected global web, and it's triggering a cascade of effects literally everywhere.
For one, a higher oil price directly props up Russia's economy, filling their war chest and making sanctions less effective. At the same exact time, you've got attacks happening in the Red Sea, which creates a second shipping nightmare, squeezing a place like Europe from two sides at once. And all of this forces central banks around the world to scrap their plans for rate cuts, keeping the pressure on the entire global economy.
And here you have it, the entire chain, laid out like dominoes. A spike in oil reignites inflation. Central banks fight back by keeping interest rates high. High rates eventually slow down the economy. A slowing economy means companies make less money, which pulls down the stock market. And the very last domino to fall, that's the value of your portfolio, your wallet.
Now this is where it gets really fascinating, because this answers the final question, who actually wins in all of this? Well, data from the last big oil shock in 2022 is pretty clear. Of all the massive windfall profits that were made, a full 50% of it went to the wealthiest 1% of the population. And the poorest half of the population? They got just 1%. An oil shock isn't just an economic event, it is a giant engine for wealth redistribution.
So you see, the big point here isn't about learning to predict wars or geopolitical chess moves. It's about understanding the machine itself. It's about knowing exactly how the gears turn, from some narrow strait halfway across the world all the way to the interest rate on your mortgage. That awareness, that's the difference between being a victim of these shocks and having a system in place that can actually absorb them.
We started our journey in a 33-kilometer strait, and we ended up right inside your bank account. We've mapped out the entire chain reaction, so the only question left for you is this. Now that you can see the whole chain, where is the weakest link in your own financial world? Because understanding that is the first step to making it stronger.